Good morning, everybody. Mike Niemiec here with some early morning grain and oilseed comments for Thursday, October 25th. The overnight trade was mixed in a small range, not much direction. As we speak right now, last time I looked, we were down roughly a cent in the wheat, corn, and beans, down around $1 in the meal, and up around 30 points in the soybean oil. We saw moderate to mostly light volume. The overnight trade was also somewhat of a quiet note. In the tender activity list, we saw where Iraq is postponed a wheat tender for optional origin. We saw South Korea buy a combo of U.S. beans and corn, and South Korea passed on some optional origin soy meal. Later this morning, we'll get our weekly sales numbers coming on out. We have been and are expecting the trend to continue of light wheat, corn, and soybean oil sales, and better than expected and or better than what the USDA has been projecting bean and meal sales and shipments. As we move forward, those shipments will be important in the fact that we'll be continuing to keep an eye on South America weather and planting progress, because as we continue to do this bean and meal business, the world is anticipating the South Americans to go and supply the market with beans and meal early in their marketing year. But if there is any hesitation by them, that demand for the U.S. will continue to be coming here for beans and soy meal, keeping our trade well supported on that front. But we're still lacking in the wheat and the corn community as far as trying to stir up business. Other competitors are a little bit better priced than us, although that is improving as a result of supplies both in the Black Sea and South America are getting eaten up by the world demand, and it's just a matter of time perhaps where this demand will start to come to the U.S. as they either start to get overpriced versus us and or have their supplies being diminished. Other than that, the outside news, China was a little bit better in their overnight trade. They had their weekly auction. Their weekly auction went quite poor in the sense that they offered 400,000 tons, only sold 39,000 tons. Their price was at domestic prices or better or more expensive than import prices. So that keeps the door open for more Chinese business. Malaysian palm oil prices were firmer. Just about a couple stories of note. There was this Asian story going around where their importers were talking about how maybe not that the U.S. is becoming less of a supplier of corn to them, but with our drought and our high prices, they're out there forging ties with other competitors, which once again, we need to get our corn business off the ground here. And then the EU farm chief came on out talking about how with the Ukraine banning wheat exports, kind of may send a little bit of a tremor around the world as far as global tension goes, as far as where world supply is heading towards. So anyway, a little bit of a weaker start. We'll see what our sales are, but in general, we're kind of more or less steady mixed trade in here, kind of stuck, awaiting more future developments in front of our trading faces. Once again, these are opinions of myself, not ADM or ADMIS. Thank you.
How much longer can it last?